Welcome everyone to Vested Interest. This is Shane and I hope you had a very Merry Christmas. As we head into 2022, as I stated in the last video, I want to continue to cover a quick overview of the 11 different market sectors. In the last video we covered all 11 sectors, and then we did a more focused look at the communication sectors. In this video we will cover the consumer discretionary and consumer staple sector. Just like last time, we'll cover an explanation of the sectors, what my holdings are in each sector, and what is on my watch list. I'll give you a little bit of my opinion on the sector. As I've stated in previous videos, guys, everything I do here is free. I've got nothing to sell you. I don't get paid by sponsors or ads, but my goal is to one day grow the channel big enough so I could see some ad revenue from YouTube. And your comments below, liking and sharing the video, subscribing to the channel, and hitting that notification bell are the only way I'll accomplish that. So if you could take a second to do just that and help me beat this YouTube algorithm, I appreciate all of your support. And now that we've gotten that business out of the way, let's get right to the video. Again, guys, here are the 11 different sectors: communication services, consumer discretionary, consumer staples, energy, financials, healthcare, industrials, information technology, materials, real estate, and utilities. And if you're looking for a very hands-off approach, you could look at ETFs and index funds either in each one of these sectors. S&P 500, for example, would probably cover all of these different sectors. But for today's video, guys, we're going to cover the consumer discretionary and consumer staples. Consumer discretionary sector consists of companies that provide goods and services that are considered non-essential by consumers but desirable if their available income is sufficient to purchase them. Consumer discretionary goods includes durable goods, apparel, entertainment and leisure, and automobiles. This sector does well when the economy is doing well and consumers are spending. In times of high inflation, recession, and times of economic turmoil, such as war or even prior to elections, this sector may underperform. So guys, basically the consumer discretionary sector is that sector, the stuff that you'd buy if you had extra money. If you're looking to get a jet ski, that's a discretionary expense. Whenever you go out and buy a new car versus a used car, you're making a discretionary choice on which way you go in that purchase, but both of those are really a discretionary purchase. You could probably find another way around if you absolutely had to. Some other things that might be discretionary, the type of clothes you buy, you can go to a place where you get something you absolutely have to have, or you go to some, fancy high-end place. All the discretionary purchases fit underneath this sector. And in my opinion, right now with inflation being a little higher, we're not necessarily in a recession, or economic turmoil. Actually for inflation being what it is, we're relatively calm economy, really. A lot of job openings, a lot of job creation, just real high inflation as well. So this would be a sector you might want to not necessarily avoid, but definitely look for areas where there's value. This would be one that might underperform, especially if inflation continues to stay high. Consumer discretionary sector has 11 industries: auto components, automobiles, distributors, diversified consumer services, hotels, restaurants and leisure, household durables, something like your washer and dryer, your refrigerator, internet and direct marketing retail, leisure products, multi-line retail, specialty retail, textiles, apparel, and luxury goods. If you're going to go buy that Rolex watch, that's a discretionary expense for sure. In the consumer discretionary sector, my current holdings, I only have the one, Leggett & Platt, and to me, actually, Leggett & Platt is down, so I continue to add to this position right now. The ticker symbol for Leggett & Platt is LEG. Some of the stocks that are on my watch list: Target, and it's actually not too overvalued. I think it's like 18 PE. It is making nice profits. Maybe after the holidays it settles down and comes down a little bit. It'd be a good buying opportunity there. Home Depot, VF Corp, they make like your North Face jackets and that sort of, so they're an apparel company. Ticker VFC. Home Depot was ticker HD. Target, ticker TGT. Whirlpool, ticker WHR, is another one on my watch list. Nike, everyone knows Nike, shoe apparel and clothing apparel, ticker NKE. and Starbucks. I don't think tea or coffee is going to go anywhere, so Starbucks would be one I'd like to jump in, but it is pretty overpriced at the moment. Next up, let's look at the consumer staples sector. It consists, well, it's sometimes called the consumer defensive sector. It includes companies. It includes companies that produce goods and services that people need daily, such as food, clothing, and household and personal care products. This category also includes alcohol and tobacco. This sector does well and will do well as long as we have people who need to eat, shower, and brush their teeth. It's a good sector to be in regardless of economic conditions because it's the things we all use and need, well, except for maybe tobacco and alcohol, and even those, well, they tend to do well in bad economic times. People continue to go to the bar and drink whenever things are bad. Actually, you might say sometimes the alcohol sector might even pick up a little bit. Tobacco might be going by the wayside a little bit more, but they do pay pretty high dividends if you're into a lot of people refer to as sin stocks. The consumer staples sector is comprised of 6 industries: beverages, food and staple retailing, food products, household products, personal products, and tobacco. Alcohol would fall under the beverages category here, guys. Within the consumer staple sector, my current holdings, this is my biggest sector. If you can't tell, guys, this is one of my favorite sectors. Consumer staples, like I said, these are things we need. These are the things people are going to continue to buy, whether things are good, whether things are bad. I think people are still going to brush their teeth. I think people are still going to eat cereal. You see General Mills on there, Kraft Heinz. I think a lot of people might go to hot dogs, be eating hot dogs instead of steak and burgers if things are real bad. So you've got your ketchups and your relishes produced by Kraft Heinz. That's why I'm in that one. Kroger is a retail sales of consumer staple goods, so that's where you'd go to shop, a grocery store. Coca-Cola, I don't think people are going to stop drinking Coke. Sugary products, Procter & Gamble is just a gambit. If you look at their product lines of products, hundreds and hundreds of products that people buy every day, paper products, diapers, that sort of thing. Spartan and Nash is kind of like a Kroger, a smaller retail grocery store. And then Cisco Corporation is a trucking company that delivers foods. They're a food delivery store. So again, these are consumer staples. One of my favorite on my watch list, Kimberly-Clark. Kimberly-Clark is a lot like a Procter & Gamble and PepsiCo. And PepsiCo would be a lot like Coca-Cola, but again, way overvalued. Pepsi is right now, and Kimberly-Clark is a little overvalued as well, in my opinion. Well, that's it for this video, guys. Those are the consumer discretionary and consumer staple sectors. We will continue this video series until we've covered all 11 different sectors. And this will take us right into 2022, where we'll continue on this investing journey together. And if you haven't started your own investing journey, I'd really like to take a moment to encourage you to do so. Your future financial security is your responsibility, and the future is coming whether you prepare for it or not. So let me know what you think of the video in the comment section below. What sectors do you like best? Do you have any holdings in either sector? And if you do, what are they? Do you prefer consumer staples over consumer discretionary, or vice versa? And let me know in the comment section below. I do personally read and respond to the comments and would love to read your opinions or questions as well. Guys, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. If you take a moment, guys, to hit that thumbs up or ring the notification bell, subscribe to the channel. It really helps me out. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time, guys. I hope you had a Merry Christmas and a very Happy New Year.